Guys, how are you doing? Hope you are doing well. Welcome back to my diary. If you are new here, in this space I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. In the previous video I was showing you about a trade that I had already entered, that is USD JPY, and there was a lot of emotion. So I guess I was talking a lot, but let's see at the end of the day what really happened in the market. Okay, so this video, and by now I know you already know in this channel I love showing you how I'm trading, how the best setup that I always use. Then you can always tell if I made money or if I lost, but I'll not come and tell you I made $100, I made $1,000. No, I'll not do that way, but I'll show you the trade that I took, the date, then you can just judge from yourself. Okay, so coming to USD JPY, by the time I was analyzing the chart, okay, even before you analyze the chart, you have to understand, before even you enter the trade, there are some things that you have to know. Why are you entering the trade? You know you are using money here and there's a lot of emotions involved. So you have to do, number one, of course you must do a top-down analysis. Anytime you want to enter the trade, even before you enter the trade, start with top-down analysis. Top down, let me write for you here. Top down, you have to start with the top down, and the top down in this case you have to start from the weekly. That is from the weekly. You have to know what is happening to the weekly, then you go to the daily, and then you can use the 4-hour. I'll explain why you can use the 4-hour. From there you have to know what is your point of interest. In this case, I always use simple support and resistance. You want to know what is happening to, is the market at resistance? This thing are the basics thing that you have to know, or is the market at support? You have to understand before even you go to your entry. Okay, you also have to know, do you have any pattern? Are there any confluence that shows you it is time to enter? If you don't love patterns, you can use the, what do you call them, there are these indicators. If you don't love the patterns, you can use the indicators. Everything at the end of the day, at least as for me, I love using the top-down analysis to know what is happening to the market. From there, then that is where when you go to the entry. Okay, entry should be the last thing. You can combine pattern and entry, because for you to find an entry, of course you must have a pattern. You must have an entry signal which indicates it's time for you to enter. You can use a pattern. Let me even start with the entry. Should be the last thing. Let me put here. Before we go to pattern, you have to start with entry support, then you have to go to entry. And in this case, when you go to entry, that's where we want to see things like pattern. And I love using 3 base pattern. The first pattern that I love to use, I call it a head and shoulder. If for example I'm selling the market, head, shoulder, I'll explain further. Then the second one that I love to use, I love using the double. I keep saying this thing a lot because in the market it is all about repeating. Whatever you have done in the past, you have to repeat it in the future. That is why we have to keep on repeating, even though the market, they are not the same. So double top, or you can use arranging channel. You can use arranging channel, or you can call it a consolidating market. Let me write it, arranging channel. Those are the best thing that if I channel, let me write well, channel. I don't know if I've written the word channel well. Channel, is it double N or double L? Anyway, and then from there, then you must have a candle. And in this case, if you are selling the market, of course I want to see a red engulfing candle. because I'm selling. But if I was to buy the market, then I will want to see a green engulfing candle. So if you already have all these things in your box or in your checklist, then you are good to enter the market. But if you miss any of this one, let me increase the size. If you miss any of this, then you know something is wrong, because at the end of the day you have to have something that, like, you're journaling, you have to follow something to know what is happening. Like, you just have to know, if I have this, if I have step 1, then I can go to step 2. But if step 1 is missing, then something is not, it means then you still have a long way to go. Now when I mean top down analysis, because now I want to explain a bit further, let me increase the size so that it can be a bit bigger. For top-down analysis, I love using 3 time frame, that is the weekly, daily, and the 4 hour. For example, why I'm saying 3 time frame, but you can use even the 4, but as for me, I prefer using the 3 time frame, because the moment I have a weekly, maybe the weekly time frame is telling me to buy, then I can go to the daily time frame to know what is happening to the daily time frame. And if the daily time frame is telling me to sell, you see, I cannot be 50-50. That is why I have to use another one. And that is why I love using 3 of them. I think my Wi-Fi is a bit slow. That is why I love using the 3 of them. Okay, or it is back. The 3 of them. Then you go to the 4 hour to know if the 4 hour saying we buy or sell. And that is when you go now to 4 hour, and maybe the 4 is telling you again to buy, you see 2 is better and 2 is more compared to 1. Okay? From there, then you have to know your point of interest. Your point of interest, it is where the market is. Maybe the market, for example, you can see how the market is. Where is the market reacting most of the time? Where is the buyers and sellers? Whenever the buyers are here, they are defeated. Whenever the sellers are around this area, they gain momentum. That is why we call our point of interest. And by then, you have to draw lines. At least we have tools like this, drawing lines, to show us what is happening into the market. And if you already have your point of interest, you have to know, is the market at support? If the market is at support, I'm not supposed to be selling the market. I'm supposed to be considering buying the market. But remember, of course, you have to know, is the market, is the daily and the 4 hour aligning? Is the daily and the weekly aligning? Is the day and the 4 hour and the weekly aligning? The only then you'll go to the point of interest. Okay. If you've already known that, then you have to go to the entry. And in this case, I keep on saying, for us to know how to enter the market, I want to see simple patterns. At the first one, I keep on saying a head and shoulder. This is a good reversal pattern that shows you the market wants to continue either heading down, or the market wants to continue going toward the upside, because you can see the market has already been tested more than 2 times. The first time is the left shoulder, then you go to the head, then the right shoulder. You see how the market is reacting around this area, and the moment the sellers gain momentum and they break around this neckline here, then you know the sellers are in control. The second one that I keep on preaching, because in this channel this is all about repetition, we call it a double top, because we are selling the market. But I'll find a video that we are buying the market, then you can do a double bottom. Okay, so when you come to the double top, remember this, the reason why we call it a double top, because it is because it has 2 tops. This is the first top and this is the second top, and the moment the buyers fail to break the second top, they drop down, they break the neckline, and in this case, this neckline is the last structure the sellers push the market to before the buyers gain momentum. So the moment the sellers come down, they break this last structure here. Don't know if you can see this structure here around this area here. It simply means the sellers are already in control. Okay, can you see how we make things as simple as possible? Don't overcomplicate things. And if you cannot find that one, then you can use a box. When you and in this case again, when you go to lower time frame, you'll find that the market tend to consolidate. Okay, so you'll find that the market is consolidating around one area. You have already done your top down analysis, so you have to wait for either the buyers to break down, then you wait for the retracement and you do what? Then you can enter the market and go along with the trend. So at the end of the day, you have to understand how to enter the market. And after the sellers have already broken down, the same case here and here, after the sellers have already broken down, of course the buyers will tend to push the market toward the upside, even though they have been defeated. And now now it is time for me to enter the market, because the moment they break toward the downside, they have already created a new lower low, and we are waiting for the buyers to push the market to create a new lower high before they push the market to create a new lower low. And that is why we keep on saying the market will never move on a straight line, because it will create lower low, lower high, lower low, lower high. You see, that is why we keep on saying you have to wait for the retracement. But remember, not all the market will react the same. There are other market that can just break toward the downside and they just head toward your TP. But there sometimes the market will just break, come back, try to retrace, or try to retrace around this area before it heads down. And after the market has retraced, what do you want to see? Because the moment the market is retracing, of course we are seeing green candles. We don't want to see green candles, we want to see red candles starting to come in. And then the moment we see a red engulfing candle, when I say a red engulfing candle, I want you to understand, because the moment you understand what I'm saying, then it will be easier. A red engulfing candle, it is a candle that engulfs the other one. Let me draw for you. This is a green candle. We start with a green candle, or it can be a red candle depending on how the market is printing. It can be a green candle or a red candle, then followed by another red candle, because we want to enter with a red candle. And the second candle, it should be bigger. It should have already eaten the first candle. Do you see how these candles look like? This one is bigger than this one. It engulfs, like you cannot see this side. You cannot see this side. No matter how you try to put it, you cannot see this side. Okay, if you are be standing in this side, you cannot see beyond this side. That is why I'm saying we must have a red engulfing candle, and from there, then we enter the market. We put our stop loss above the high low, the lower high that has already been created, because the moment you have a new lower low, then we'll have a new lower high. So this is where we'll put our stop loss and our TP toward the next structure. Of course, now that one will use the higher time frame to know what is happening into the market. Now let's go to the chart to see what is happening, because I've already done all the work. Now it is just to show you what really happened. From the daily time frame, I had already analyzed the market. The weekly time frame, from the weekly time frame, we were very bullish. And when we go to the daily time frame, do I have to write it here? The daily time frame, we were very much bearish. Let me just write it here, because I want you to understand what is happening. So from the weekly time frame, we were very bullish. Then when you go to the daily time frame, we were very bearish, and the 4-hour we are bearish. Now which one makes sense? Do we have to buy or sell? Of course we have to sell, because 4-hour and the daily time frame, they are telling us we should sell the market. This is the daily market. And when we come to the point of interest, where is the market reacting most of the time? The market is reacting around this area. Can you see how the market is behaving whenever we come around that area? You can see how whenever we are down, we are selling. Whenever we break around this area, we are buying, and with a very big candle, because for the support to be broken, or the resistance, we want to see big candles like this one. If not one candle, at least we have to see a good momentum candle, 2 candles following each other, and they are very strong. Okay, you can see again how the buyers and sellers are behaving around this area. So the moment I just know, oh, we are above, I'm supposed to be buying. We are below, I'm supposed to be selling. And remember, 4-hour and daily, they're telling us we should be selling the market. So already we have our trend, we know where the market is heading, we know where the structure is heading to, and we have our point of interest. Now let's go to 4-hour, because it is more visible, and we'll understand more when I go to 4-hour. compared to the daily time frame. Now when you come to 4 hour, of course there is a lot of details, and you can see this market was ranging around this area. Can you see how this market was behaving around this area? Let me reduce the opacity so that it can be a bit, let me just put it this color blue here. You can see how the market, the buyers and sellers were consolidating around this area. You know the structure already has shifted. Can you see how this structure has already shifted around this area? So from the daily time frame, you can see around this area how the red candle has broken toward the downside, and now the market was consolidating around this area. And you cannot say we will buy the market, because we want to see this structure either being broken toward the upside, then you can consider buying. But in this case, the market is consolidating and we are heading toward the downside. So what do? You have to wait for the sellers to break, come back and retest. The same thing I'm just saying. Wait for the sellers to break. After they have already broken, then wait for the retracement. You see how they broke here with a very big candle. They came back to retest, and that is when we get our opportunity to enter the market. So the market has already retested and it is reacting toward again this same area. Now we go to 1 hour to see, can we find patterns, because the lower time frame, they are used for entry. Okay, lower time frame should always be used for entry. When you go to 1 hour, what do you see? You can see how the buyers and sellers were trying, the lower time frame, you'll find that the market has already broken toward the upside, but when you go to the higher time frame, these are only weeks. Okay, so the moment you see this kind of a pattern like the double top here, because this one is a good pattern like a double top here, if you don't find it, you can just even go to the 30 minutes to see what is happening. Again, you can see another good form of a double top. Can you see this M around this area? This is a very good indication that it is an M here. This is a good form of M or a double top, because it has two top, the first top and the second top, and you can see how the neckline was broken, then it came back. After coming back here, you can see how they broke with a very good candle. This is a good example of a bearish engulfing candle. Can you see this candle? It does not even have a wick. It is a marubozu. It is a very good indication that the sellers are in control. And after there, can you see how the sellers came in? There was a lot of emotion, but this is the lower time frame, because the moment you just enter, of course there is a lot of activities happening in the lower time frame, but at the end of the day, what made me to enter the market? I had a pattern, and which pattern was there? The setup I was using was this clear M, a good indication of a double top. If it was a head and shoulder, well and good. If it was arranging, it is well and good. But this is a good way of showing you that the neckline of the double top has already been broken, just for the retracement. Then you can enter. But as for me, I never entered at this rate. I just entered using this candle. Okay, this is the one that I entered with, and from there, then you have to wait. There's nothing more you can do. If you cannot, 30 minutes take faster before the 1 hour, and by the time after the 30 minutes have already been printed, you can see when you come to 1 hour, now you can see the clear double top being created and the neckline being broken, and from there you have to wait. Okay, you enter the market. Place your stop loss above the current lower high that has been created, and your TP should be toward the next zone. That is when you go to 4 hour to know where do I place my TP, because you cannot just place your TP. You have to go with the structure of the market. Where is the market most likely to go to? The market, the sellers were most likely to go to the last lower low that was created on the higher time frame before the market started to reverse. Can you see? This is the last area the sellers went before they started. You can just you can place around this area anywhere, but at around the area where the sellers they are most likely to go to before they start to reverse. And you can see at the end of the day, using the higher time frame, you can see how the sellers came in. The buyers trade even to push the market. I don't know if there was news. They tried to push the market toward the upside, but with one red candle, the TP was hit. But you have to wait. It takes a lot of time to be patient waiting for this market, and you get your 100 pips and your stop loss is only 40 pips because I'm not a scalper. So I hope you've understood how I entered the market, and you can see how the sellers went, took my TP, and now they are going back. So thank you so much for watching today's video. I hope you've learned something, and it takes patience for you to wait for the 100 pips. Until next time, bye bye.